After only 4 months, 2024 is proving itself a very complicated year for investors. Several markets stretch to all-time highs, volatile yields, and the risk of having higher rates for longer given the sticky inflation. Bitcoin and several equity indexes are not the only ones to have reached their historical highs this year, but also gold. The main questions we are asking ourselves are, why gold? What is driving the gold price to its all-time highs? Is it a good entry point? Welcome to GB Market Insights. So starting from why gold, given the strong price action we have seen so far in 2024. There are several different reasons why investors may want to own gold in their portfolios. It has historically been a hedge against inflation in the long run, with investors flocking into gold in periods characterized by sustained inflationary pressures. Gold has historically been regarded as a store of value and a key hedge when the market turns to risk-off. When equities are under pressure, investors look for safe havens like US bonds and gold. So far in 2024, we have seen anything but a risk-off market with several asset classes trending higher in a sort of rising tide. So this would not be the market scenario in which investors would theoretically be adding gold exposure to their portfolios. However, we can still highlight three main underlying drivers behind the surge in gold price that led it to its all-time highs. Firstly, gold has reached its record high driven by the rising global uncertainties as geopolitics remains under the spotlight. Increasing worries about a potential wider conflict in the Middle East have pushed the demand for gold higher. Secondly, expectations of central bank rate cuts played as a key tailwind for gold in 2024. From the perspective of inflation and monetary policy, the support factor for gold comes from a combination of both. Inflation is still a major issue for most of the largest economies in the world, and at the same time, central banks believe that monetary policies are already restrictive enough, ready to pull the trigger to start cutting interest rates. Expectations of central bank interest rate cuts also boost gold's appeal, since the yields on fixed income assets like bonds typically fall as rates go down. Lastly, China's consumers and its central bank have been snapping up gold, even as a falling yuan makes the metal pricier. China has decidedly overtaken India as the world's largest buyer of the commodity. What can we expect in terms of price trajectory going forward? Is there any major risk we should be aware of? China's reduced appetite for gold reserves might cool the rally. China's gold purchases have significantly slowed down, adding the lowest amount last month since 2022. The decline in demand from the Chinese central bank can be the main headwind for gold in the coming quarters. As usual, this is not financial advice, as the topics discussed are for entertainment purposes only. Let us know your thoughts in the comments below. If you found the video interesting and useful, please leave a like and subscribe to the channel to help us in our YouTube journey. Thank you for watching.